Hello and welcome back to All Things Money. I'm your host, David Blain. Thank you for joining us today on this Election Day 2012 in the United States. We're talking about some tax issues that the results of the election are going to impact greatly. And so I've got a list of, 14 or 15 issues here that we want to look out for, depending on who wins the election, President Obama, the challenger Mitt Romney, and what it means for you, the individual taxpayer. If you missed the first show, we talked about the payroll tax holiday and the ordinary income tax rates that are scheduled to rise. Head on over to our website, www.dlblain.com. That's DLBLAIN.com. And there you can listen to a recorded show and catch up on what we talked about. We got a lot to talk about, so I want to keep moving forward on into the tax cuts on long-term capital gains and dividends. Now, the current long-term capital gains and dividend rate are currently 0% and 15% for most long-term gains. It's scheduled to rise to 10% and 20%. And the current, that's on long-term gains, and then the current 0 and 15% bracket for dividends will go, you may not even remember this, but it will revert back to ordinary income rates. The past several years, the dividends have been taxed at the same rate as long-term capital gains, but tax policy for years before that, dividends were taxed at ordinary income, and so for people above the capital gains rate paid a much higher tax rate on dividends than they did for capital gains. Of course, people in the lower tax brackets, it didn't matter, they paid the same. But for people in the higher tax brackets, paid a much higher rate. In fact, a week or two ago on the show, we talked about this, how an investor in the state of North Carolina, should these taxes come into play, along with the new 3.8% Medicare tax, that a higher income taxpayer in North Carolina would pay more than 50% of any dividend income in income tax, which is a little ridiculous. So my prediction for the long-term capital gains and dividend income is that I think the preferential rates will be extended once again for everyone except for the top two brackets. It's really these top two brackets, people that are in the highest income brackets, that I think are in play here. I think if President Obama is reelected, that those people's taxes will definitely go up. And if Mitt Romney wins, I think they'll stay the same. The marriage penalty, what I think is one of the most significant impacts of the tax policy, some of the tax changes, was the elimination of what's called the marriage penalty. And what they mean by that is that if you look at the tax brackets, if you're single and then if you're married, it wasn't twice the amount, being married was not twice the amount of a single taxpayer. And so by effect, if you had two single people earning, the same amount, by getting married, their tax rates actually went up just by the virtue of being married. And this is one of the things that we see for tax policies. We don't want it to influence social policy. If there was no marriage penalty, then a lot of the issues around marriage and what it means would be left out of the federal government. So we see that the marriage penalty is scheduled to come back, where it would be less advantageous to the married person. Number two is the deduction. Once again, you get a standard deduction for a single person, and it was twice that for a married couple. Well, that's scheduled to fall back to 167%. So once again, you have this dual marriage penalty. I think that regardless of who wins, I think they will continue with the current tax policy and do away with this marriage penalty. It really doesn't make any sense. Nobody likes it, and it just doesn't make any sense. Okay, personal exemption and itemized deduction phase-outs. The previous tax policy had itemized deduction and exemptions phasing out for higher income taxpayers. Those rules were largely eliminated, And we see that I think that if President Obama wins, these what I call stealth taxes will come back, meaning that the higher income taxpayers will lose personal exemptions and they will lose itemized deductions simply by virtue of the fact that they make more money. And so this is, although it's not a tax increase, it really is. By phasing out deductions, you are increasing the tax on people. So I think if Romney wins, I think those rules will stay the same. If President Obama wins re-election, I think you'll see those taxes come back. Alternative minimum tax patch, this is something we've talked about, every year on the show, and every year Congress fails to address it until the last minute. Once again, I think that whoever wins the election, that they will increase the AMT limit so that less people are subject to AMT. However, I think if President Obama wins, I think you'll see the continued mess with the AMT. If Romney wins in the Republican House, I think there will be some effort to get a permanent fix to this issue that happens every year. Okay, estate tax. This is a big dollar tax. Probably doesn't affect a tremendous amount of people. The current rules, the way they are very generous to people when they die, as it should be. I personally am opposed to any sort of death tax. I think it's ridiculous that someone dies, that then the government comes in and takes part of their money. But this is one that I think you'll see there is some bit of agreement on both sides of the aisle as to what should happen. Well, we're coming up to the end of the second segment, so when we come back for the third segment, we'll talk about what I think is going to happen to the estate tax.